Welcome back, everyone, for another deep dive.
Hmm.
Today, we're going to be looking at some pretty interesting crypto trends.
Yeah.
And we're going to be using this recent report from Crypto Deep Dive as our main source.
Yeah.
So, get this. The overall market cap is holding steady.
Right.
But there's a ton of activity going on just below the surface. Kind of like,
Yeah, like the calm before the storm. It's like everyone's getting ready for something big.
yeah, exactly.
Yeah, the global crypto market cap is sitting at around $3.27 trillion, which isn't a massive shift from recent days. But what's interesting is the trading volume. It's up over 20% in the last day.
Wow.
Yeah, so this could mean that investors are repositioning themselves, maybe reacting to news or just trying to anticipate the next big swing.
Okay, so it's not a calm sea out there, even if the tide seems pretty steady for now. And the report also mentions that Bitcoin's dominance is down slightly to 56.17%. That's a 1.41% drop. So what does that mean? Is Bitcoin losing its grip?
Well, it's not quite that dramatic. Bitcoin is still the dominant player by far, but this dip does suggest that altcoins are gaining some ground.
Interesting.
Yeah, it could be a sign of growing confidence in these alternative projects. Or maybe investors are just diversifying their portfolios a bit. We'll be looking at some examples a little later that kind of illustrate this trend.
Okay. All right, so there's a little bit of shift happening. Now let's talk about Michael Saylor's proposal, because this one really caught my eye. He's suggesting that the U.S. government create this massive $81 trillion Bitcoin reserve and then use potential appreciation to pay off the national debt.
It's a bold idea.
Yeah, is this even remotely feasible? It sounds like something out of a sci-fi movie.
Yeah, it's certainly a bold idea and one that has sparked a lot of debate. So let's break down the feasibility. Imagine the logistical challenge alone of acquiring that much Bitcoin. It would have a massive impact on the market. And then there's the political aspect. Getting this kind of proposal through Congress, that would be an uphill battle, to say the least.
Yeah, I mean, even if everyone agreed it was a brilliant idea, which they definitely don't.
Yeah.
Just like doing it seems impossible. But the report also mentioned a study by VanEck that supports this concept. They're projecting a 35% reduction in U.S. debt by 2049 if this were to happen.
Wow.
I know, right? That's a huge if. But still, a 35% drop is nothing to sneeze at.
Absolutely. It's a significant potential benefit. But you have to remember, this is all based on projections and assumptions about Bitcoin's future performance. We're talking about a very long time horizon here. And predicting anything in the crypto world, let alone decades out, is inherently speculative. So it's a thought-provoking scenario. But it's important to be realistic about the uncertainties involved.
Right, so a grain of salt is definitely needed with those long-term predictions. But this brings up a point I wanted to ask you about Saylor's proposal. Even if it's a long shot, it just seems like a sign of how seriously some people are taking Bitcoin. Is this a sign of just growing institutional interest?
It's definitely part of a larger trend. We're seeing more and more institutional players enter the crypto space. And Bitcoin is often their entry point. It's kind of like the gateway drug to the rest of the crypto world.
Right.
So let's look at some specific examples of how this is playing out, because it's not always as straightforward as you might think.
Perfect, yeah. Give us the inside scoop on what the big players are doing. I'm all ears.
Okay, so let's start with MicroStrategy. They're a company that's known for its pretty significant Bitcoin holdings.
Mm-hmm.
They actually just bought another 5,200 Bitcoin.
Wow, that's a lot.
Yeah, it sounds like a lot. But here's the thing. It's actually their smallest purchase since July.
Oh, interesting. So even though they're still buying, they're being more cautious than before. What could that mean? Are they maybe getting cold feet about Bitcoin?
I don't think it's necessarily a lack of confidence. It could just be strategic timing. They might be waiting to see how the market reacts to certain events, or just adjusting their buying strategy based on their own internal analysis. But it is worth noting that even with this smaller purchase, MicroStrategy is still a major Bitcoin holder. So, it's not like they're abandoning ship or anything.
Right, okay, so maybe a little less buy, and a little more wait and see for them for now.
Exactly.
But the report also mentioned another company, Metaplanet, that just went all in with a huge Bitcoin purchase.
Yes, Metaplanet. It's a Japanese investment firm. They just scooped up $60 million worth of Bitcoin during the recent dip.
Oh, wow.
Yeah, it's a classic example of the buy the dip strategy, where investors capitalize on these price drops to increase their holdings.
So one company is tapping the brakes a bit, while another one is diving headfirst into the dip. It seems like there's no clear consensus on the best approach right now.
Exactly, and that's what makes the crypto market so dynamic. You have different players with different risk tolerances, different investment strategies and outlooks on the future. And it's not a one-size-fits-all situation.
Right, for sure. Speaking of different approaches, let's shift gears for a moment and zoom out to look beyond just Bitcoin. Remember how we talked about Bitcoin's dominance dipping slightly? Well, the report dives into some interesting happenings in the altcoin world that might be contributing to that. Like, for example, Tether, the company behind the stablecoin USDT, just invested a whopping $775 million in Rumble.
Yeah, this is an interesting move for a couple of reasons. First, Rumble is a video sharing platform that recently added Bitcoin to its balance sheet. So you see this connection between Tether's investment and the growing adoption of Bitcoin by companies outside of the traditional financial world.
Interesting.
And second, Tether has been very vocal about their support for decentralized platforms like Rumble. They see this as a way to promote alternatives to the centralized tech giants.
Right. So this is about more than just a financial investment. It's a statement about supporting a certain vision of the internet, a more decentralized and open one.
Precisely. And this ties in nicely with another trend that's gaining momentum. The explosion of Ethereum-based NFTs collections like Pudgy Penguins and Azuki generated $304 million in weekly trading volume recently. Yeah, that's a significant chunk of money flowing into the NFT space, specifically on the Ethereum blockchain.
So could this NFT boom be a factor in Bitcoin's slightly shrinking dominance? It seems like investors are exploring other avenues within the crypto ecosystem, and Ethereum is a major player in that space.
That's a very astute observation. While Bitcoin is still the king in terms of market cap, Ethereum is carving out its own niche, particularly with the rise of NFTs and decentralized finance applications. Investors are diversifying, and Ethereum is benefiting from that trend.
This is all starting to paint a really interesting picture of a market in transition. You have Bitcoin holding strong, but also this emergence of alternative platforms and applications, and investors exploring all these different strategies. It's almost like the Wild West is starting to become a bit more settled.
That's a great analogy. We're seeing a maturation of the crypto market, but it's still a very dynamic and unpredictable space. Now, this growing institutional interest we've been discussing is also leading to increased regulatory scrutiny. For example, Google just announced a new policy for crypto advertising in the UK.
Oh yeah, I read about that. They're requiring all crypto advertisers to be registered with the Financial Conduct Authority, or FCA. What's the thinking behind that move?
It's all about consumer protection. The FCA is the UK's financial regulatory body, and this move is meant to ensure that crypto ads are transparent, accurate, and not misleading. It's a way to weed out scams and protect investors from bad actors.
So it's like a sign that regulators are starting to take crypto seriously, recognizing that it's a significant part of the financial landscape now.
Exactly. It's a step towards bringing more legitimacy to the industry, but it also raises questions about how much regulation is appropriate and how it might impact innovation.
That's a good point. Too much regulation could stifle creativity and drive some players away. It's a delicate balance.
Speaking of innovation, another development worth noting is blockchain's recent partnership with Audius and ICE to expand music royalties using blockchain technology.
Oh yeah, this one caught my attention too. It's all about using blockchain to streamline royalty payments for musicians, right? Seems like blockchain has the potential to disrupt a lot more than just the financial sector.
Absolutely. This partnership aims to streamline royalty payments for over 330,000 rights holders. They're trying to solve a problem that has plagued the music industry for decades, making sure artists get paid fairly and efficiently for their work.
I can imagine that would be a game changer for a lot of musicians. It's always been a struggle for them to get their fair share, especially in the digital age. So blockchain could bring more transparency and accountability to the music industry. That's pretty cool.
It's a great example of how blockchain can be applied to solve real-world problems beyond just financial transactions. And it speaks to the broader potential of this technology to disrupt and improve various industries.
This is really fascinating stuff. We've covered a lot of ground in this deep dive. We started with the overall market trends, then zoomed in on institutional moves, explored the altcoin landscape, and now we're seeing how blockchain is being used to revolutionize the music industry.
And we're not done yet. There's one more development I want to highlight before we wrap up. It's about Hex Trust and their new stablecoin USDX.
Okay, let's dive into that. Remind me again, what exactly are stablecoins?
Yeah.
Why are they important?
Yeah, so stablecoins are cryptocurrencies that are pegged to a stable asset like the US dollar. This makes them less volatile than other cryptocurrencies, which is why they're becoming increasingly popular, especially for things like trading and payments. They're kind of like a bridge between the traditional financial system and the world of crypto.
Right, so they offer some of the benefits of crypto.
Yeah.
Like fast and cheap transactions. But without those wild price swings, that can make some people hesitant. So what's special about this USDX stablecoin from Hex Trust? What makes it stand out?
Well, USDX is integrated with the Flare network, which is a blockchain platform that's focused on interoperability.
Okay.
This means that USDX can be easily used across different blockchain networks, which is a big deal for expanding its utility and reach. It's also designed with DeFi, or decentralized finance, in mind.
Okay, break that down for me. What does it mean for a stablecoin to be designed for DeFi?
It means that USDX can be used for things like lending, borrowing, and other financial activities within the decentralized finance ecosystem. DeFi aims to recreate traditional financial services, like loans and investments, but without the need for banks or other intermediaries. It's all about using blockchain technology to create a more open and accessible financial system.
So it's like taking the concept of stablecoins a step further, using them as building blocks for a whole new financial system. That's pretty mind-blowing. It really shows how much innovation is happening within the crypto space. It's not just about buying and selling Bitcoin anymore.
Exactly. The crypto landscape is expanding rapidly, with new applications and use cases emerging all the time, and it's attracting investors from all walks of life, from individual retail traders to large institutions.
Which brings us back to those institutional moves we were discussing earlier.
Mhm.
It seems like despite some caution, like we saw with MicroStrategy's smaller Bitcoin purchase, institutional interest in crypto is still very strong.
I agree. We're seeing this in the strategic investments, the development of new services for institutional clients, and even in the ongoing discussions about Bitcoin's potential role in global finance, like Michael Saylor's proposal.
Yeah, let's revisit that proposal. It's such a radical idea, even if it's a long shot. I'm curious to explore the potential implications a bit further. Let's play devil's advocate. What are some potential upsides besides the debt reduction that Van Eck highlighted?
Well, proponents of this idea argue that holding a significant Bitcoin reserve could hedge against inflation. Bitcoin's fixed supply, capped at 21 million coins, makes it resistant to the inflationary pressures that can affect fiat currencies. They also believe it could strengthen the US dollar's position as a global reserve currency, particularly as more countries explore central bank digital currencies.
So it's about securing a place for the U.S. in a future where digital currencies play a larger role. Interesting. But I imagine there are plenty of critics who see this as a huge risk. What are their main concerns?
They worry about Bitcoin's volatility. It's known for its price swings, and critics argue that basing a national reserve on such a volatile asset is incredibly risky. They also point to the potential for market manipulation, especially if a government entity held such a large amount of Bitcoin.
Right. It's a lot of eggs in one basket, so to speak. And it definitely raises ethical questions about the government's role in the crypto market. It's a complex issue with no easy answers. But regardless of whether Saylor's vision ever becomes reality, it's a sign of how much Bitcoin is shaking up the world of traditional finance.
Absolutely. It's a reminder that we're living through a period of profound transformation, and the rules of the game are being rewritten as we speak.
So for our listeners who've been with us on this deep dive into the crypto market, what are some key takeaways they should keep in mind as they navigate this exciting but often confusing world?
I think the main theme that emerges is this. Despite some market volatility and uncertainty, the crypto market is showing signs of maturity and resilience. We're seeing increased institutional interest, strategic partnerships, a growing awareness of the need for regulation, and a constant stream of innovation.
It's like the Wild West is slowly becoming a more established and regulated frontier. But there's still a sense of adventure and opportunity that's attracting pioneers from all over.
Exactly. And for our listeners, I'd say stay informed, stay curious, and never be afraid to challenge the status quo.
We hope this deep dive has given you some valuable insights and a better understanding of the forces shaping the crypto market today. And remember, this is just a snapshot in time. The crypto world is constantly evolving, so stay tuned for more exciting developments.
Thanks for joining us on this journey. Until next time, keep exploring, and may your portfolio always be green.
Happy diving! We'll see you back here soon for another fascinating deep dive.